Welcome back. You're watching Investors Guide. Thanks for staying with us. Now, like we promised at the beginning of the show, in the run-up to the festive season, we know a lot of you are considering your gold purchases right now. And to help you make better decisions, Naveen, Mathur, Associate Director of Commodities and Currencies from Angel Broking, has joined us in the studio today to answer your questions on gold. Now, we know gold has had a volatile couple of weeks. And before we go across to Naveen and ask him how we should be making these purchases, take a look at this quick report to bring you up to speed on the movement of gold in the last couple of weeks. And then we'll come back and we'll talk to Naveen about it.
The Indian love affair with gold is no secret. To us, gold represents all that is pure and sacred, and it has become a part of every celebration and festivity. And with the festival season upon us, it is no surprise that everyone wants a share of the glitter. But with gold prices scaling new highs, buying the yellow metal is becoming increasingly prohibitive. Globally, gold is set for an 11th consecutive year of a bull market, and it seems there is no end in sight. Over the past year alone, prices have risen almost 20%, touching a record high of $1,923 to the ounce on the 6th of September. Back home, a mere 10 grams of gold can set you back by 26,000 rupees. And the culprit behind the steep price rise? The global equity market. As the world grapples with economic and financial uncertainty, they have been selling out of equity and investing in the one safe haven they can find. Gold. But prices have seen a correction since last month's high. Gold has slumped 15% as investors had to sell the precious metal to cover losses in other markets. And since not buying gold is not an option for us Indians, the dipping prices will make sure that gold continues to sparkle this festive season.
Alright, Naveen, gold has stayed at 26,000, around that range for a while right now. So when you're looking at it, where do you see it move till the end of the year throughout this festive season? Because we have one viewer who's written in, Hemavati has written in, she wants to know, should I buy gold this week? Do you see it falling further over the next couple of weeks? Should I wait? Is this a good time to buy?
I think there are two different ways to see investing in gold right now. One, that if you want to do it lump sum, I mean, you want to buy it in total, some kind of a corpus amount.
But would you advise that? Or would you
no,
say?
That's what I'm saying. If somebody wants to do it lump sum, I think this is not the right time, even at 26,500 levels where the gold is right now, to invest in lump sum. I think one way to look at is that one should enter gold markets, a staggered way of investing in gold. Why I'm saying not the lump sum right now? Because the downside is there. It's restricted. The upside potential is pretty high. But then I think there's better way to invest gold right now when you do in staggered way of investing in gold. Couple of options you have. You have ETFs in India. You have something called as e-gold of the National Spot Exchange.
When you say stagger the investment on gold, that is one way which you approach the equity market. Every time it dips, I buy some more. But that's slightly more difficult to do with gold because the market is so fluid, because it's difficult for a retail investor to constantly track the price of gold. Would you recommend then that I put the money on an ETF and just have it go away every month and buy a certain amount of gold? Does that make more sense?
I'm not saying every month. Do it every week. It depends upon how much money you have in your pocket. Means if you want to shell out, say, a gram of gold, which costs approximately 2,500, 2,600 rupees for one ETF, and if you have that pocket allow you to do it, you can do it even in a week's time. Now, just to take you from the point that the financial markets, the timings in the financial markets is very, very difficult. Means be it equity markets, be it commodities, or be it anything on the currency side. So I think timing the market on the lower side and investing in lump sum is somebody's out of control question. But then I think staggered way, best way to do it today.
Pritesh Shetty has written in, and you were just talking about the different ways in which we can buy gold in this country right now. He said he wants to know if there's any gold scheme investment where he can put money away monthly and buy a demat form of grams of gold. He doesn't want to invest through a mutual fund. He wants to buy grams of gold, so he knows exactly how much gold he has in a demat form. Which, according to you, would be the best way to buy gold right now?
The one of the way is definitely, as I said, the e-gold contract, which is worth of a 1 gram contract. And if you want to transfer it into a physical 8 grams, multiples of 8 grams, 10 grams, you can accumulate in your demat account by buying through this platform of the online exchange, and then even convert it into the physical gold. One positive about this particular investment would be that I think the NSCL, the exchange, is tying up with jewelers. They are talking about 10,000 jewelers across India, where you can just take this receipt of your demat account holdings. They will going to calculate the value. They're going to redeem the particular demat account, and you can buy it, the jewelry from that particular store.
You've heard all kinds of exciting numbers come out about gold. People were talking about maybe 35,000 before Diwali this year. We were talking about 65,000 in the next 2 years. Are any of these realistic in your view? See, obviously, as investors in India, we don't just buy gold to sell it in the next 3 months. This is something we buy for security, we buy for sentiment. So in the next 4 or 5 years, where do you see gold going?
I think the scenario has become too much volatile. So I would be wrong predicting something 4 years, 5 years down the line. Now, but if you ask me today, where do we see gold's status quo today, where we stand in terms of the economic uncertainties, we stand in terms of the sovereign debt problems in the Eurozone, I think Indians are doing very well. By this year end, the fiscal year of this year, we'll be the largest buyer of gold for a couple of years. I mean, we used to actually import 700, 800 tons of gold normal years. This year, we may even cross 1,000 tons of gold, or 1,100 tons of gold. So in spite of being higher prices, it's not a deterrent not to buy gold. You asked me for an outlook for 4 or 5 years. As I said, it's pretty difficult, but the scenario remaining today, I think by this year end, it is fine for me to say that we can see even the prices at around 29,000 or so for gold.
So 29 or 30,000 rupees for 10 grams of gold by the end of the year, which means it brings us back to where we started. It makes sense to start buying now in small spurts so that you're not waiting till it hits 30 and saying, okay, I should have bought it when it was at 26. Quick question. In the festive season, for you, silver or gold, which would you recommend for a retail investor?
One word, the 4 digits. So 4 letters of the alphabet. GOLD is the gold. So I think if you are very risk averse, don't venture out on silver.
And if you have questions for Naveen about your gold investments, you can write to us. There's an email ID at the bottom of your screen. We'll ask him to come back and answer your questions for you. Naveen, thank you so much for joining us on Investors Guide. It's been extremely nice to talk to you and have you answer our
Pleasure always.
All right. That's a wrap on this show. Thanks for tuning into Investors Guide. Email ID at the bottom of your screen. Tune in next week. We'll bring you more advice in the festive season. Thanks for watching.